Hello and welcome to The Mortgage Conversation with Saffron for Intermediaries. I am your host, Tony Hall. We are joined today by two mortgage professionals and, drumroll, LinkedIn royalty. And I will let them say hello to you in a moment. Before we start, I just want to tell everybody we're recording this on Wednesday, the 12th of March, and it will air on the 1st of April. So any of the conversations and topics we discuss today will be up to this date of the 12th. And I will also say that the views and comments expressed today by myself and our other podcast guests are those of our own and not necessarily our employers. So let's meet our guests. So first of all, Matt, if you can have a quick hello and say hello to the camera, who you are, and for our listeners, that'd be wonderful.
Hi, everyone. So my name's Matt Surridge. I am the Director of Linear Financial Solutions and the Interim Sales Director for LSL's Financial Services Division, which covers Primis and TMA.
Thank you. Rebecca.
I am Rebecca Shuttle, and I'm the Principal Director of MIMA Mortgage and Protection Advice.
Wonderful. Thank you so much for joining us. And lastly, the LinkedIn influencer, that is Lee. Please tell the audience who you are.
Yeah, so I'm Lee Williams, National Sales Manager at Saffron for Intermediaries and an advocate of LinkedIn.
I don't know why he has to do that, but that's cool. Maybe that's what I'm an advocate. Or I'm an avocado. I don't know. Anyway, let's crack on. Good. So, with the end of the tax year, just coming up after this is aired, actually, this recording, it often has an impact on the self-employed. So we're going to use the self-employed as our lead topic today, okay? And I'm delighted that you guys are here with that breadth of experience and opinion. So there's been a couple of articles published in the last few days around, one, the self-employed are being let down, but the opportunity is there. And then the other one was the UK needs its self-employed. So why are we forgetting them? And there's a lot of statistics that we can look at. But Lee, I'll come to you first, because Saffron did some research into the self-employed market back in 2023. So I just thought we'd start with you in terms of what did that highlight to us?
Yeah, so in terms of the research, I don't think it was massively surprising in terms of the results that we got, but actually disappointing in the sense that it was the sentiment of self-employed, that how hard it is to get a mortgage. So one stat that really stood out to me is 73% that took part said that it would be really hard to get a mortgage. They felt that they were disadvantaged by being self-employed. And I know other studies have highlighted that, with actually some self-employed customers saying that they've gone employed to get a mortgage, which is really disappointing. And actually, another stat that sort of stands out is a third of those that took part said that they didn't feel that their mortgage broker understood their business well enough, and felt that had an impact on them being able to get a mortgage. Which ultimately I always then, as a lender, think, well, actually, from a lending point of view, does a lender think about the business fully, or actually think about what fits behind those figures on the year-end accounts? So, yeah, the study, although not surprising, very disappointing. But obviously there are a lot of options and solutions out there for self-employed. But it's just that sentiment is rife when it comes to the self-employed.
And I mean, I was just looking at the article from Together, which is the one we're discussing, and it talks about 4.4 million self-employed workers currently in the UK. I think the pandemic saw that grow as people had to look for alternative ways of working and earning money. That the sector's set to rise by 67% over the next 5 years, from 20 bill to 34.8. And an interesting stat is that the self-employed are sitting on £82 billion of disposable income, which is, according to this report, the average first-time buyer. Yeah, it's good for me to say. The average first-time buyer deposit for over 1.6 million times. It's a lot of cash. So, Rebecca, what are you seeing with self-employed in your business?
I think with self-employed, fundamentally, it's not disposable income, because they're probably when we sort of consider different types of employment, they're the people that have the most flexible disposable income. I think one of the challenges that we find is, on paper, it's proving the sustainability of that income. I think it's the complexity of that income which can be misunderstood. I think it's understanding how business growth doesn't necessarily mean immediate profits. And so whenever we're dealing with self-employed clients, it's always initially it's an understanding of the business basis, it's the structure of that business. It's also, clearly looking at the proofs that can be provided to support that income. And then in some circumstances, it's actually explaining that back to the client to help them to understand how their running of their business is going to impact their ability to get a mortgage. So I would say that what you're reading there is very, very true and very relatable to the clients that we see on a day-to-day basis.
So to Lee's point around, almost 3/4 of self-employed don't think they can get a mortgage. Is that your experience when they come into you?
I would say yes. I'd say probably one of the first things that a client will say to us, I know this is going to be difficult because I'm self-employed, which is really interesting because I think sometimes that is the opposite of our view with a client. So when somebody comes to us and they say, I'm self-employed, for us, it almost presents opportunities. So particularly if you're looking at a client perhaps who's a limited company, because there are 3 ways in which we can assess that income, and we can look at the way which we can enhance the options which a client has just purely from them being self-employed, which somebody who's employed doesn't get. So I think it's really interesting that the view is the challenge from the client's perspective. From us as the broker, it's the complete opposite. And I think that's probably where we need to be more vocal in the mortgage industry about being self-employed is not disruptive to getting a mortgage. It's actually more about the understanding of how that can help you to get a mortgage. We also see quite a lot of clients who don't actually understand their businesses. So we get people who come to us and say that they're employed and actually they're a company director earning PAYE. And that, I suppose, if you don't even understand how your own business works, that's going to make it more complex for you to get a mortgage because you've got to try and explain it to somebody else.
So Matt, what's your view? Same question. What's your view?
Yeah. Firstly, Tony, what's really interesting is I wrote all those stats down, and not only was that a waste of time because you've got them, you've got an iPad, and I've got a notepad like a mug.
21st century, baby.
21st century, I know. And I think we can talk a little
Save
bit
the
about
planet.
Technology as well, how that can support the industry. But I think that's for a little bit later. Coming back to what you directly said and thinking about the points that you made, Rebecca, is let's go back a step. Let's go back a step actually even further. You said it's really important that we have these types of people with those types of employments in the industry. It's hugely important for the market. And I would completely agree. Just think about my personal circumstances. I'm getting my bathroom redone. My plumber's self-employed. He runs his own business. It goes beyond just self-employed. There's other complex type of incomes. Think about fixed-term contractors. I've got a staff member going on maternity leave, so it's great that I can have someone who's a fixed-term contract coming in to fill that gap. So there's a real need to have those roles available. And coming back to what you said, Lee, about some people thinking, I need to stop now and go employed because I need to buy a house. We all know starting a business can be a real challenge. There's a lot of entrepreneurs out there, but it takes time for that business to flourish. And if you're having to chop and change, firstly, that's going to make it quite difficult to ever get up and running with your own business. And then it comes down to the people that you see. So I think those customers, first step is, who do you engage with financial services from the youngest age? It's probably your bank, because you've got to open an account when you're quite young. That's probably your first point in going in and getting some advice. And unlike advisors that I'll have at Linear, advisors like yourself, Rebecca, in the bank, they probably have got more restrictive criteria and probably a high demand for supporting documentation. And they're probably not getting the level of advice they would, for example, coming to see you. And there's a real bandwidth of advisors as well out there, because you've got some who may have sat CMAP 4 weeks ago and some that have worked in the industry for a long period of time. I mean, Rebecca, I've heard earlier you're award-winning. How many years have you been in the industry?
I started advising in a bank in 2006.
So that's a huge amount of experience that you've got. And I imagine someone coming to sit down in front of you compared to someone who's sitting down, someone who's been doing it for a few weeks, that's a very different conversation. So when we think about the point you made, Lee, of actually there's loads of options out there for people, and Rebecca, you said it's not a problem actually. I'm quite happy to deal with these types of customers. It's probably those, was it 87% you said, had an opinion that it was difficult to get a mortgage?
73.
73. Oh,
So I'm almost.
should have written that one down in my notepad. But still a huge number of people. And I think it's that awareness piece. So coming back to, again, Rebecca, what you said about making sure the industry is aware, I think it's down to also advisors making sure they engage with their customers and they've got that message going out. So thinking about what you've got on your website, is it optimized for search engines? Because people will be going out actively looking for this support and they need to be able to find the right place to get it.
Absolutely. I was just going to come on to that point around, what can we all do to help the self-employed feel more confident? And it is that website thing, because I talk about this a lot. And if you Google self-employed mortgage, the first hit, there's a couple of PPC hits you'll get from brokers, but the first kind of answer from Google is, yes, you can get a mortgage, but you need to be of trading for at least 2 years, which we know is factually incorrect. There's a lot of lenders at 1 year. So to that point of, what does your website say about what you do? Yeah. And I've done some research on this, and a load of websites say great stuff about, we're lovely, we're transparent, we'll help you do this. Actually, what do you do? What areas of the niches do you specialise in? How would I know that you're my broker? I don't mind about your transparency until I know what you do. So I think that's a call for me to lenders and brokers is, to Matt's point, what does your website say about you? Because that can help these 73% of people that haven't got a clue that they can, or think they can't get a mortgage when they can. Lee, sorry, you were going to say something.
No, I was just going to say that my wife's a classic example of this, where even if I do have an opinion about something, she will go straight onto two things, a website and reviews. And if it's a case of someone self-employed, then ultimately being able to see on a website, yes, I specialise in self-employed. These are the types of cases that we've done. If you've got them as case studies, I always think case studies read well. But I think the other key thing with that is if it's on your website, absolutely, it needs to be on your website. But the other key thing is it needs to be really easy to understand. I see so many websites where it's War and Peace, trying to explain every circumstance, and they actually just make it, and we were discussing it earlier, weren't we, Bex? It's some websites actually make it look like it's really difficult to get a mortgage. So actually, the only way you're going to get one is dealing with a broker, which, obviously we want, we know that brokers do the vast majority of mortgages, have the vast amount of experience, knowledge, options. But we shouldn't be making it look like it's really difficult. That's the only reason you should reach out.
Yeah, I completely agree, because we were having a look at different examples of the way in which brokers advertise that they worked with self-employed. And actually the way that was often categorised was to get a mortgage as somebody who's self-employed is really challenging. And actually, when you delved into some of this information that was within the website, it was like proof of income, affordability, deposit, which is no different to anybody else. And so actually, perhaps as a mortgage industry, we have had a part to play in
bigging up your
pushing out to self-employed, you're not going to get this. And obviously from our perspective, it's you're not going to get this unless you speak to us. But we need to perhaps move away and sort of start looking at this in a more positive manner and sort of encouraging people that, just because you're self-employed, it doesn't mean you cannot get a mortgage. It may mean that there is more information which might need to be provided, but that becomes part of a conversation that you have with any client, and it shouldn't be the first thing, I think, that you're faced with when you do a Google search.
Yeah, look, I agree. I think that's great. It's really good to hear that. So, next question, same subject, but how have you seen, or how have lenders adapted to this changing environment of self-employment? How have you seen that since the pandemic, really, I suppose? I'll come to Becky first and then Anne, all of you, actually, because I think it's a useful point.
I mean, as Matt very kindly brought up, I've been a broker or mortgage advisor since 2006. So I've had award-winning broker.
I've got socks older than you, so
many years
do not
of
panic
experience.
about that.
It does, to some extent, feel as though we've come slightly full circle. So when I was at the very early stages of my career, self-employed assessment wasn't necessarily about what you're doing in the past, it's about what you're doing in the future. So we used to lean heavily on projections for businesses. We used to be able to put together cases for underwriters to look at, if it wasn't just it's going to fly straight through and, that side of things. And then we hit the pandemic and it became very, very rigid. And it, to some extent, I believe that the mortgage market started looking at people who were self-employed as these businesses may not survive. And obviously some didn't, but I don't think we've yet moved past that. And self-employed people at the time of the pandemic and shortly after came under huge amounts of scrutiny to prove sustainability of their business. In some cases, there people who took advantage of perhaps the COVID grants because it was the only way that they could keep their business going or, their family surviving. They were then penalised further. Since then, things have obviously improved, but I do feel that there is still this rigidness in the market. And I would love to see lenders and underwriters moving more towards understanding the business, understanding the growth, understanding where, if a business is investing in their business and their profits drop, that doesn't mean that they're doing poorly. And I think it's just looking at it further than this is a bit of paperwork that I've got.
Lee.
Totally agree. I think that the challenge is there's a number of brokers that wouldn't be able to do what you just said there in terms of look at the business in more detail beyond the figures. Because you look at CMAP, for example, you're qualified, you can give advice, you've not even looked at a set of accounts. Right? So I think there's a lot of education that can be done to support brokers in being able to do that. And then from an underwriting point of view, absolutely more lenders being on board with that. We obviously, as us at Saffron, I'll talk about that for 1 second, is that obviously, from our point of view, we are a lot more flexible when it comes to that and trying to understand the business, understand the projections of what the sustainability is going to look like, trying to do things like use the most recent year with big uplifts because we can see that it's sustainable, the trajectory of the income is going to continue. So, but I think that a big part of that is the broker understanding that as well as obviously the customer. So obviously it always starts with the customer, I get that. But when the customer doesn't understand because they love running their business and they're not about finance, then that's where a broker having a really good educational piece with their customer and actually turning them potentially from specialist to mainstream is key when we're trying to demyth this. And I do think the market needs to do more. Yeah. I agree with you, to make it less rigid.
Agreed. I think it comes back to conversations, doesn't it? It's about the person that you're dealing with, the broker that you're dealing with, wanting to understand your business and wanting to help you, but the underwriter also wanting to do the same. And I believe that that's where we're lacking currently. We've been there. We know we can do it. I think I would love to see that would come back. And I think you'd find that more people who are self-employed would have a higher success rate of achieving their mortgage.
Cool. I can't believe we're 20 minutes in and we're on subject one, but I'm still going to stick on it because I want to come back to a point that Matt made around it isn't just your classic self-employed, it's also contractors and things like CAS workers. So how is the same perception out there for those cohorts of people in terms of getting mortgage, Matt, do you think?
Yeah, but do you mind if I add a few points to the
Please.
previous conversation?
Yeah, please do.
Tony, if that's okay, because there's a couple of bits I want to jump on. Firstly, with what you guys were talking about around the education piece, and are you saying there's a lot of people out there that might not be able to have that quality conversation with an individual about their circumstances? And you're absolutely right. There's a good friend of mine he's a BDM at Santander, a guy called Jason Neighbour, who literally would go out and the first thing he would do, especially if he knew the advisor was new to industry, is actually sit down, talk them through, do you know how to read a set of accounts? Do you understand what you're looking at when it's a tax year overview or an SA 302? He'll talk about criteria later, but for him, he wanted to make sure the people he was speaking to could have quality conversations with their customers. And this is where I think anyone who's listening, if you're part of a network, part of a club, like, we'll have Primus NTMA that will put on events that will work with strategic partners like yourself, where you'll have subject matter experts that can come in and show you how to do this. And I think, don't be afraid to ask the question. Don't think someone's going to judge me for not knowing, because, my job title says I'm a mortgage advisor. I'd rather hide behind kind of my pride than my
No, I
understanding.
think you've spot on.
And then the other part is I really empathize with, God, let's try that word again, empathize with with lenders in this space, because when customers come in, there's a variety of ways that lenders will approach this. As you said, do you prefer Becca or Rebecca? I've been calling you Rebecca this whole time. Rebecca, we'll go Rebecca.
Yeah,
That's great.
that's the politest one.
So
Or
Rebecca,
award winner.
No,
She
yeah,
doesn't
yeah.
mind.
Award-winning advisor,
There you go.
Rebecca.
Thank you. My full title, please.
Lady Rebecca.
Perfect.
Award winner.
You've hit the nail there. Thank you.
Right, and that's all we've got time for today. Yeah.
I forgot my point. So the point you were talking about before, like, some lenders will take the most recent year's accounts, but there is such a variation between some lenders taking the most recent, some looking at the last 2 years, some taking the lower of the last 2 years, the average of the last 2 years. So again, that perception of, am I disadvantaged as a consumer being self-employed? It's very easy to see how you could substantiate that claim, because there's even reduced income multiples I've seen with certain lenders if I'm self-employed. And as I say, I can empathise with the lenders because they're under a requirement to make sure it's responsible lending, that people can afford the mortgages that they're taking out. And it's very difficult sometimes, especially the time of year. Probably now's a great time if I'm self-employed to be looking at a mortgage. I've done my tax returns, but actually if I'm the back end, if I'm Q4, I might be looking at the previous year, and it's not really a live snapshot.
Absolutely. Yeah.
So I think there's two parts. We'll probably get onto the technology bit in a moment, but coming back to the underwriter education, I've had to do interventions with underwriters where they've gone, actually, the profits are decreasing, we're not going to do it, but they're not diving deep and go, actually, the gross sales are up or productivity's up, but the profits are reduced because they've reinvested in the business. So again, it's that educational piece. So I think if you've got advisors that are confident and understand the circumstances, they can actually challenge back, because lenders will be open to that challenge. I know you guys probably would, your underwriters would. We're all human. We don't get it right first time, every time. And I think as long as you've got open dialogue, it supports those customers better. And then, sorry, Tony, you did ask me a different question.
No, it doesn't matter. Yeah, no, I was just saying, do you see the same challenges with contractors as we see with the self-employed?
I think there's probably different challenges, but distinct challenges, because again, that variation with lenders that are out there might be a preference to contractors where they're from an IT part of the industry. You've got fixed term contracts, you've got lenders who will look at how long's remaining on there. So again, you've got that such variation in the appetite that the lenders have. It'd be very easy for consumers to have a different perception of it. But I'm sure an award-winning mortgage advisor might say how easy this is.
No, I wouldn't say it was easy. And I would say particularly with fixed term contractors where you've had the in IR35, outside of IR35, that's caused additional confusion, particularly with how lenders would classify somebody's income. So no, I would completely agree. I would say that it all falls into that same category, and it is just coming back to kind of the understanding of how this income is generated. How is it sustainable? How does a client control their disposable income to be able to afford a mortgage? And I think all of that is it purely comes off of the back of good conversations, and looking at different ways that as mortgage brokers, we have 26 mortgage lenders that we can go to 26 mortgage lenders. Don't focus on one particular provider and their criteria, because a client could do that themselves by going to the bank.
Lee, any last thoughts from you on this one?
I think that, again, it's all about awareness. I think that sometimes, again, from a customer point of view, they could speak to you about being self-employed, and actually the flip side of that is actually they're a contractor. So I think digging deep, really understanding the income, really understanding, if it is a contractor, not be scared to ask those questions. And going back to what Matt said, if you are a broker or anyone in the industry where you're thinking, actually, I just don't know where I would get that conversation going. It's almost like it started and gone, oh, I'll stop there. I don't know how, I don't want to highlight that I don't know what I'm doing here, right? Actually, you have got so many BDMs and lenders that are desperate to work with you. Just pick up the phone, talk to us, because actually we would be keen to steer that conversation and try and understand how we can best work with you. So from an educational piece, not just from a policy point of view.
Thanks. Look, I'll just wrap that up, because particularly with contractors and CAS workers and foster carers and things like that, a lot of lenders will treat them as self-employed and will go through that either accounts or SA 302 approach. Lenders in the specialist markets will come on to, and Saffron and one of those will look at them differently and treat a contractor as a contractor and a CAS worker not as a self-employed, which provides far more flexibility in allowing them to exercise the right amount of income that they need. So that's another key thing of why it's important to know your lenders, to your point, Rebecca. So on to that, let's move on to topic 2 today, which is kind of linked, but there's an article. I won't go into the article, but I think the headline's interesting around Challenger and specialist banks are growing their market share. I think that is quite obvious. And I spoke yesterday to a distributor who was telling me that this year they expect 33% of their business to be via specialist lenders. So it's clearly growing because and their high street share is reducing. So I suppose to Rebecca, you first, where does your business go, or what are you seeing?
We have a real spread between your high street or your smaller building societies or the challengers or the specialist lenders. And again, it's very much about the client that you're dealing with. But I think that the increase in the share which is going towards challenger lenders is more around that bespoke underwriting service that you get, and it's looking at that, the way that people generate their income in more modern times. It's not just very structured, I'm employed or I'm in self-employed. We see side hustles, we see influencers, perhaps you've got hybrid income coming in, maybe you've got a contract. So some of those clients aren't going to fit in nicely and neatly into the boxes of these mainstream lenders. And so therefore, the lenders that will take a more bespoke approach are going to grow their market share. I think naturally that's happening just because of the way that people's lifestyles are changing.
I think there's a stat last year, it was 18.4 million working adults in the UK are now. Oh, it's a day for that today, isn't it? You've started this before we went on air, but I will not talk about it now. I'll leave it for the 3 of them to talk about. But the stat was 18.4 million people are now classed as multiple income earners through necessity. Hence why that. So, Matt, what's your thoughts on this challenger specialism rise?
Yeah, I think it's a really exciting time in the industry. Now, I started as an advisor in 2003, and then I've done other roles outside of face-to-face advice from around sort of 2012. And back when I was an advisor, I didn't have a lot of the tools that are available today. So think of Criteria Brain, Knowledge Bank. It's easy to start seeing all these new brands coming, and whereas before I would see customers, I'd sit down and say, these are the lenders that we can talk about. And they'll go, well, I've never heard of them. I don't know who they are. So there's two parts to this. As a consumer, I think the behaviours have changed because how many people now have heard of Monzo and Chase, and that's now their current account and their debit card. That wouldn't have really been an option back when I was first giving advice, and people wanted that high street. They wanted the ability to walk through a door, speak to someone if they had an issue. But as time has gone on, you've got branch closures, you've got all these new businesses that are coming. And coming back to the points you guys were making earlier around reviews as well, it's very easy to go and get that trust that you'd have over a brand, to go and find that trust with a name that you may not be familiar or recognise. And it's the same if I'm an advisor. I still want that brand and that trust and that recognition, because when I give that advice, it's still my advice on my brand. So I think it's great that you can see the details around the challenger banks, but I don't think, and by all means, anyone challenge me on this, I don't think you'd get as much pushback now from people looking to embrace these types of brands. And they've also got different risk appetites as well. And this is where I think we start to see some innovation in the industry often comes through from the new names that come in, or from especially building societies as well and mutuals. They seem to be very keen on looking at their proposition and changing that proposition and probably can do it quicker than maybe some of the larger banks. I'm glad you did the caveat, Tony, at the start. These are all our opinions.
Yeah, absolutely. Look, you're right. You're right on all counts. The building society piece is more is more of a necessity unless you're the big boys, the big building societies. It's about protecting margin and protecting member benefits. To do that, you've got to go down the risk.
It's the member benefits part. I love.
Risk and reward elements.
Yeah.
Lee, just on this subject then. So, from your perspective, how do you think the high street are facing this challenge of their knitting being taken away from them?
I think that we're definitely seeing some trying to get more and more into that space. It's difficult because obviously, they're more high volume. So actually a lot of the things that we're talking about is where manual underwriting, being able to speak to somebody, having that sort of approach is key, and having that expertise as well is key. But actually we're seeing more and more doing things like higher income multiples, doing other things to help affordability, foreign incomes. That's been one that a lot of high street lenders have got involved in recently as well. So I think that obviously from their point of view, they're looking at it going, how do we still get the lending volumes that we need? But actually, and then obviously that drives the challenger banks, building societies, specialist lenders to be even more specialist, if that makes sense, because that's squeezing that part of the market, and then we're innovating to go, actually, we'll help you in a different way. So I think it's good for the market evolution.
Yeah, interesting. I'm going to go a bit off script here and ask Lee a question if I can. You mentioned the word innovation there. Do you think there's more that can be done from the lender's perspective with innovation to try and take away some of that burden of proof around 2 years worth of accounts, 12 months worth of income proof if you're a contractor or a day rate contractor? Is there more that could be done there, do you think?
Yeah. I mean, I can expand on that, but yeah, I mean, there's a huge amount more that can be done. I mean, I think that, AI is such a buzzword right now, but, there's loads of different things that can be done. Open banking has not been, embraced as many would have hoped. And there's so many things that can be done, absolutely. But confidence, for me, it comes into confidence. It comes into how correct and successful is it, and going back to like networks and things. I mean, ultimately, we need to get to a point where everyone embraces it to make it possible.
Yeah, see, I agree, and it's really interesting you mentioned open banking, because I also thought open banking would really kind of blow the industry open with access to data and information. But from my perspective, it seems like it's had a lukewarm reception, because even if open banking was accepted with the lenders, there's still the due diligence that's required by the advisors. You're almost getting it in one place to then try and provide it in another. Yep. But I was thinking this morning on my way here around how could we innovate. Obviously, it was a very leading question into Lee. How we could innovate into the industry. And this is where I thought, maybe lenders revisiting the adoption of open banking, because if you do link that with things like AI, and I'm not talking about some of the standard AI that we see at the moment with machine learning. So you've got generative, it's a very difficult word for me to say, generative AI. And that's the type of AI you'll see where people create new images. It's more flexible. So what that can do is it can look at unstructured data and lots of different data points. So if it had access to open banking, I was thinking, well, actually, the real difficulty for lenders is understanding in any real detail what people's affordability is with self-employed, because you don't get the monthly pay slips. You've just got those 1 year kind of pictures every single time. But if we embraced open banking, we used things like generative AI to help improve some of the efficiencies, not take it away from the underwriter. You still need measured governance of anything that goes in, as you said, the confidence part of that. You still need that measured governance that comes in. But I think you could take a lot of data, which is very difficult for a person to do efficiently and quickly, and actually get a really good understanding of what people's affordability really is.
Absolutely, Matt. Look, and I think from a lender perspective, we 100% agree with every single thing you said. And if I could do that and have it all, I'd have it.
Yeah.
And if it was that easy, everybody would have done it. But we're facing, from a lot of lenders, you're facing a lot of systems that were built in different technology times, and it's very hard to migrate your business, but extremely costly. And it's
the legacy
it's
part
the
of it.
opportunity cost of moving from current state to future state, which you want to be. How long is that going to take? How much is it going to cost me? And what am I prepared to lose along the way? But you're bang on. But the reason open banking hasn't taken off, you've all mentioned it, is consumer confidence. Okay, lenders, we're all over it. I'd love it. We're quite comfortable with it. We trust the technology. Brokers kind of trust it, but their clients don't. So they're getting asked, will you sign up to open banking? The client's going, no. So that's point one. Point two, which is helping, is all the OCR technology. So scraping documents, So AI is doing that efficiently now. It's, we're talking to firms that can look at it's not just bank statements, P60s. The AI can actually look at a set of accounts and pull out the important figures, all right? Same with an SA 302, same with whatever. So that's available. And all of this is enablers to efficiency to enable the right person to make the right decision at the right time. But AI will evolve and will start to do those, already AI can underwrite basic cases, all right? And I believe from talking to people, within 6 months to a year, it's going to be able to start understanding and underwriting more complex cases, because all AI is reading data, right? And all the decisions we make as humans have to be entered somewhere from a little thing called regulation and auditing and proof as to why we've made decisions. So provided at some point AI reads all this, why can't it make the decision? It's not going to be now, and it's going to be carefully monitored, but it's really exciting and it's really beneficial for everybody, because it just leads to quicker, faster decisions made by the right person, doesn't it? So love the concepts of everything you say, Matt. 100% on board, and I wish I was the lender that could be the first to do it, as I'm sure there's a lot of lenders out there that would be.
Oh, they would.
But
it's just ways you can push the boundaries of what's available now.
Absolutely. And building societies are probably at the slower end of this adoption, if I'm honest, because it takes longer to do these things. But we're looking at it every day. We've got full project teams looking at this, going, how can we be more efficient? How can we support the markets we want to be in? So let's move on, because I'm conscious of time. So one of the things we looked at, topic 3, was around the collaboration that's making the most of specialist opportunities. So basically the commentary was saying, despite all the headline grabbing global issues, 2025 is looking to be a positive year for the UK mortgage market. But one of the keys to that is the industry and brokers collaborating within the specialist arena. So if I say collaboration, Matt, what does that mean to you?
For me, I think it's everything we've been talking around there for the whole session, because especially in the specialist world, you rely heavily on your relationships with distributors, so the brokers. And it's creating that awareness within brokers of actually the options that are available for customers. Because you're right, the market's growing. I think UK Finance were predicting a 16% growth this year. IMLA was suggesting that next year it could be up to 91% of the market goes via intermediaries.
Yep.
And if I was an advisor, I'd be looking to make sure I've got as diverse a knowledge base as possible, because I was reading a blog in Mortgage Strategy at the start of the year, and it suggested that customers were more likely to come back to their advisor and a complex or specialist type of lending than they had been if it was a mainstream case. So if I'm an advisor, that's a growing market with a real need. I'm probably going to have better long-term relationships with the customers that I see, which could lead to more referrals as well. So for me, collaborating with the lenders and the subject matter experts. As you said earlier, Lee, if you don't know, come speak to us. It's not just about a cup of tea, a pack of biscuits, and who's winning at the footy. It's how can I add value to your business, and how can I help you serve your customers better? And for me, that's the collaboration.
Rebecca, what about you?
I completely agree. But I think there is a flip side to that as well. So I think BDMs in the industry at the moment, from our personal perspective, they need to work on building trust with their brokers, and it's trust that they understand the business which brokers are trying to do. So it's, for us, it's client to house. You know, for you, it's client to mortgage. We're right in the middle of this, and and have been talking about this a lot in our office. But you know, in the last 12 months, my experience is that, whether this is coming from up high, I don't know, but BDMs have less involvement, or they have less ability to influence an application. That is what it feels like as a mortgage broker. And a lot of that does come down to these complex scenarios that we've been talking about, between people being self-employed or contractors or two incomes, whatever the situation might be. And so I think actually we need to roll that another level back, and we need to go back to the underwriters who are ultimately making the decisions. And perhaps we need to say to the underwriter, actually, you need to build trust with your BDM that you're going to have some core influence in the business that they're trying to create for your brand or for your bank or whatever it might be. You know, we used to have delegated lending authorities way back, and we were talking earlier about how we're both ex Cheltenham and Gloucester. And, you know, we could put together sort of these scenarios. If we are going to move into a market where, you know, people are going to be reaching out to their brokers 91% of the time, and 67% of those cases we're going to be looking at are self-employed people, it all comes down to the trust in who you're dealing with, and whether that's trust of your broker, trust of your BDM, or trust of your underwriter. That is where we're falling down at the moment.
It's a really interesting point. And do you find there's a variation between types of lenders that you speak to, whether BDMs have more or less influence with underwriters?
I don't know whether it's types of lenders. I would say BDM experience.
Is this just across the board?
To some extent.
Just across the board. They're there for the biscuits.
It's probably, but you know, broker to BDM roles, I think, are always really helpful because they've been there and they know that. Definitely your smaller building societies, I would find that if I spoke to a BDM, they would say, well, actually, it doesn't fit our criteria, but let me see what I can do.
Yeah,
See, the bigger lenders, you're just going to get more automated no's. I would say that it does, to some extent, feel as though there's less pushback. I mean, I'm a challenger broker for challenger lenders. You know, if you come to me with a declined decision that isn't legitimate, I will push back on that. And what I'm looking for a BDM is for them to go, yeah, I agree, because they're talking to me and they're seeing what my clients are trying to get.
So you're almost expecting, you know, the same sort of due diligence, like probing back to you, like, tell me more about the situation, what's that, and then they can go back and present it internally.
Because you talk about AI and, you know, scraping documents, there is only so much you can get from a document. It is always going to come back to the person and the individual involved.
Yeah,
exactly.
This is where, as lenders, we see so often, though, that where brokers don't help themselves is, yes, a list of stuff will raise a load of questions or not. If there's one on there that looks like you need to highlight it and tell us what it is, do it, because so often that will be the thing that stops the case or slows it down, and could have been 100% avoided if, with a bit more due diligence, the broker's gone, this is what this is about, don't panic about it, this is the evidence. And so that's not always done. That's one of the challenges. I'm really conscious of our time, so we could talk for hours, but I'll come to you, Lee, on this next story, because it links to the 91% of all mortgage business flowing through our market coming through brokers. Okay, so this is the views of the outgoing chief exec of Amy, Robert Sinclair, who's talked about sensationalist title, lenders will try to claw back market share from brokers. Okay, so I wanted to finish on this one because that was an interesting story, and I thought, as we've got lenders and brokers here, it's worthy having. So I'll come to Lee first from a lender perspective. What do you think to that? He's basically saying behind it, you know, lenders are, you know, being pushed into a corner with costs and overheads and et cetera, et cetera, et cetera. What's your view?
I think it depends on the lending model. There's obviously going to be some lenders that will obviously be very keen to get more of their business direct. Obviously, from our point of view, we're intermediated. So from that point of view, you know, our business is all about working with brokers. So from that point of view, I can't see. Obviously, we're not going to be in that majority that you're talking about there, where they're saying that they're obviously going to be pushing back. But I can see with the evolving use of AI tech and everything else going back to that again, and ultimately, yes, there are going to be lenders that are going to have that business model to do that. I think that they are obviously going to be looking at how can I get more business that way. I also challenge back on that in the sense that actually, from a broker point of view, there's a lot of fantastic brokers, award-winning brokers, I keep adding that, that do look after their client banks. Right, so actually, I think that's key. That's absolutely key. Is looking after that client bank, speaking to customers in advance, actually creating that loyalty. You know, you have customers that come back to you to deal with you, irrespective of whether a bank has approached them. Right, that's what should be built, because they get to know you as individuals and as firms, and actually from a direct proposition, that's very hard to replicate.
Yeah. I think there's also probably an element of this that comes all the way back to, you know, those self-employed clients, and 4 out of 5 of them feeling as though they couldn't get a mortgage. You know, if you're somebody that is self-employed and, you know, perhaps you remortgaged or purchased your house shortly after the pandemic and you found it really difficult and you felt that you're under scrutiny, you probably don't want to do that again. And, you know, lenders do make it quite easy for you to go back to them as their existing lender and to change their interest rate. And what we're creating by lenders making that easier, and for people, and for us, you know, making self-employed seem really difficult in the mortgage market, we're actually pushing people into a position where they're creating their own mortgage prisoners. You know, they're not getting advice. They're just going on there, just picking an interest rate. And in this kind of market, when it's volatile, we talk a lot about people's vulnerabilities, talk a lot about making sure that, you know, people get unbiased advice and they're going to the right lender, and affordability and the cost of living crisis. And banks are shutting their doors on the high street. I'm just not 100% convinced that trying to send clients back to branches to only do it that well, back to banks, is actually going to happen, because I think, you know, mortgage advice and broker role is so valuable, but also I think it could be quite dangerous as well for some consumers.
Yeah, I completely agree. So I think Rob Sinclair makes a really good point, because I'll take it from a lending perspective. Operational efficiency is going to be very important to run that business effectively. And then if I think about it from an advisor's perspective, well, you know, I'll look after the customer. I gave it to you in the first place. Where's that relationship, that collaboration? But actually, I'm going to take it a whole step back, and this is the point I always land on. I think about, how does this impact that end customer? Now, take myself. In the last 2 years, because most people take a 2 or a 5 year fix. So if I think the smallest window of time, 2 years. In the last 2 years, if I go back 2 years ago, I wasn't married, didn't have a kid on the way. All those things now I do have. So should I go down the route which is easy, 3 clicks, PT done? Or do I go down the route which is right, which is actually, most people take their mortgage, or typically now over 35 years, and what's the average age? 35? I think that was actually in the article, Tony, that you pointed
34,
out.
35 first time buyer.
So should I have a good review of my circumstances at that point? Not just 3 clicks and it's a new rate and I can get on with whatever I'm having for tea that night, or actually, do I need somebody to speak to actually have some of those more challenging questions? Not to just see if that's the correct rate to be on, but actually, what else do I need advice on, be it my circumstances, my protection? So I think making it easy is great, but let's not underestimate the value of the advice element of what we do.
Look, absolutely. I have to come this to a close because we're over time. But I think on that point you're right. But you think back to your position. If you weren't in the mortgage industry, would you know that the 3 clicks wasn't the right approach?
Yeah.
right? So that's where we've got to do more.
Yeah.
Both as lenders, if they're going to go down that route and go, are you really sure this is the right thing for you? So I think, but that's
Yeah.
a great place to end. You know, I think everybody, we could have part 2. This is part 1.
I'm having a good time.
And we'll
Tony.
get Matt and award winner back. And
Lady
maybe we'll let lady maybe we'll let the linked influencer come back as well at some point.
Please.
But look, that is 51 minutes has absolutely flown by. So thank you so much,
Thank you.
Rebecca, Matt,
Thank
Lee.
you.
Look out for our socials announcing this. As I said, we will go live with this on the 1st of April, and it won't be an April Fool, hopefully. Please do follow us on LinkedIn, and don't forget to follow us on your favourite channel, because that way we can notify you when the next episode of the Mortgage Conversation is released. So you can watch these, as I said, on any of your favourite channels. Apple or Spotify, and if you want to not just listen but watch it, Spotify is probably the best one for that. But as I always say, if you are driving or operating heavy machinery, do not watch it. Listen to it. Look, that's it from me. That's it from our guests. Thank you so much for listening, and we'll see you next time.